Good morning, everyone. Hope you're having a great week so far. Jason Jacoby here. Wanted to make a quick video for you and send it out this morning. It's about 7 a.m. at the time of recording. I've been here at the office since 5:45 this morning, trying to get some stuff done. I look casual, I look tired, and a little bit delirious, so I apologize for this quick rant here. But I wanted to get this out to you and some information. But first of all, wanted to let you know that my wife and I welcomed our second son into the world on Friday, May 6th at about 2 p.m. At Hogue Newport in Newport Beach. And he is healthy. His name is Luca Mark Jacoby. Mom is doing well, recovering from C-section, thus my need to be at home, working from home over the next few weeks on and off, just to help her recover from the C-section and chase around our almost 2-year-old toddler, Jackson. Which is tons of fun. It's good to spend time with him and Luca, our newborn, and my wife, and help her out because she helps me out, so I can help you guys out. But anyway, I just wanted to again do this quick video. I am optimistic. I am excited. I am thrilled to announce that the CPI numbers, which measure inflation on a month-to-month basis, cost of goods, has come down from 8.5% in March, which was a 40-year high, down to 8.3%. You can hear a pin drop, right? You're like, Jason, why on earth are you excited about that? I'm excited because I think inflation has peaked, which has been my prognosis or more hypothesis since last month. With everything elevated, there's been no good news the last 4 months or so. Heading into May, in a midterm election year, again, this is like the worst 3 months for stocks, they say, but I think that's actually going to be not true this year because usually markets are up heading into these 3 months, which we've been down historical levels. NASDAQ, down over 24%, S&P and Dow flirting with 14, 15%. And then the aggregate bond market, if you had bought a 100% bond portfolio, which would usually kind of be steady and stable, provide some hedge against your equities in your portfolio, have been down an almost record of 14%, historical, downturn in the bond returns, 14%, worst since 2008, which again we all remember was just hell. So, again, I am optimistic again because I think inflation has peaked. I think that even with no good news yet, seeing that come down, even if it's 0.2%, is a good sign that better days are yet to come. Heading into quarter three here, we're in quarter three. And then heading into quarter four and the holiday season, consumer demand is still strong, which is a positive. Corporate earnings for this past quarter were incredible. Most companies beat expectations according to the S&P 500. So earnings were strong, corporate profits were strong, even with inflation. So that's a good sign, people. I know everyone's worried about recession. Could happen in 2023 or late 2023 in the next year or so. Likelihood, 25% possibly. Again, we don't know. We don't have a crystal ball what's going to happen in the short term. Definition of a recession is 2 quarters of negative GDP growth, which is a contraction in our economy. We just had our first one actually this past quarter, so we could already be in one actually, and we don't even know it until this next quarter GDP numbers come out. But anyway, 2 consecutive quarters equals a recession. Had one again March 2020. It was a really quick recovery in the stock market. Markets always recover before economies do, just keep that in mind. But my whole point of this is better days are yet to come. It might be painful in the meantime. I know I've gotten a lot of calls. Everyone's worried. There's really been no safety in the market these days, barring specific sectors like oil, which have had record returns. Usually they're pretty stable, pay a specific dividend, but have had record growth over 60%, I believe, this last year. Probably over 65% now. But again, just wanted to get this out to you for a cause of optimism. Hang in there. I know, again, we've been getting some calls saying, hey, what are you guys doing? Like, what kind of moves are we making right now? My response to that, sometimes the best moves to make are none at all. You hang in there. We built this portfolios. Forward looking, we already planned for volatility this year. Hang in there. Again, have a long-term mindset. You shouldn't be invested in the stock market if you have a short-term mindset. We always preach that because we don't know what's going to happen in the short term. Again, we could have a nice rally, which we saw last week of over 4%. When the Fed came out and said they weren't hiking rates as much as the markets had priced in. Just going to stick with that 50 basis points, which is half of 1%, this next meeting and this last meeting. And then they'll kind of go from there. But 75 basis point rate hikes are off the table for now, which is good. So the cash is there on the sidelines for rallies, for participation when stocks are on sale, which they look like they are or getting close to right now, right? Based off of market returns. And again, remember, markets have had historical returns over the last few years. So that's why we've had a pretty big decompression, which is good. You know, taking money off the table, taking earnings out is the fuel and food for the next bull, which again, you can kind of see it on my wall over here. I have a picture of a bull and a bear kind of split down the middle. That's the personalities of people, optimism, pessimism. I'm optimistic in general, but specifically right now, I think, again, we're going to start seeing inflation tick down. Might stay elevated for a little while, but it's going to start ticking down, I think, over the next few quarters into next year, which could help us avoid inflation if we can get it under control and get some good news. Hopefully, ceasefire in Russia and Ukraine. Interest rates, hopefully, they can get that catch up without doing too much damage, and basically tightening the policy too quickly and too fast and too much. But it needs to happen. They need to raise rates. They should have done it sooner, but now they're doing it. So it's going to be a little bit painful. It has been painful. But I think the worst has already come, is my point. Stick in there. Hang in there. It's always darkest before sunrise. Remember that. I think the markets have fallen the majority of the way. We could see another 3 to 5% down to support, which is what we call kind of like a baseline support level. Is around another 4 to 5% at the next level, but we could not. Again, we've seen most of the movement already. So hang in there. Again, focus on your needs, your goals. We've already talked about all these things. You can call me if you have any questions, but again, very optimistic. Sorry for the rant, but I hope you all have a blessed and wonderful day and a wonderful week. It's an honor to serve you, and hope to see you all soon. God bless.